Hello, everyone. Welcome back to the RationalInvestor.com's Crypto Countdown, TRI Crypto Countdown. I think on YouTube it's called TRI's Top 100 Crypto Review. And with the boys here, we just call it Brian sits here and barks for a couple hours and lets them talk every once in a while. Something like that. This is our midweek show. We do pretty much actually 2 free shows a week. One show here Wednesday evenings, which I kind of like to concentrate on crypto specific and crypto related ideas and commentary. And then we also do a free show on Sundays. I call it the Broiler Chicken Show. Why? Why not? That used to be a product I used to trade when I was a futures broker and trader and all that. That's semi to speak to students, also maybe be a little bit of a public education forum. I know there's a few people that have watched those free Sunday shows, and they basically taught themselves how to trade because of those, which I'm really proud of the fact that not only do we have a website and we have a service and we have a school, and then we actually employ a lot of people. So we're doing good things in the world, even when we charge people money. But also, too, we have, I think I do a lot of free content. A lot of, learn at your own with none of the advertising shill. Like, I don't know whether you guys are surfing Google these days, but the ads are thick and coming fast. I suppose a lot of people are making a lot of money with the advertising on the videos, but we don't do that. Everything's here free. The only thing we do ask is if you find some value in all of this and you'd like to sort of help us back. These days. Ideally, what I wanted to do was take all of these YouTube videos, and there's just bazillions of them. You can actually, at any given point in time, you can go and look at the channel. I don't think I've ever shown you guys this on this video, but tons and tons of videos. Now the guys are even putting together little short clips from the site of stuff that we sort of, we talk about. We have, of course, our level 1 instructor. He did a little clip this past week on strategic planning for our level 1ers, and I was so impressed with it that I was like, dude, we got to soundbite this. We got to just somehow get this out into the world. I mean, so, this is a fun new project, these cute little videos, and I think they're doing a good job. People are pretty happy with them. We also, we have this, this is the current show. Actually, I guess this is this in the wrong place? What a doofus. I will go and put this into this category. It's supposed to go down here. And as you can see, episode 48, we've been doing this crypto show here weekly for a very, very long time now, right? Actually, just about a year. Well, I actually consider it a long time, a year. We also actually did a great video series with Coinigy. And I did a few tutorials. You can find them on here. But actually, we don't have the link. We probably should have the feed to the old Bat Show streams on here as well. That would probably be a good reference piece. But, just even these crypto trading community shows, 235 videos. And, each of my rants is a good couple hours. Oh my goodness, you could spend a lot of time in there. Have fun. And as I said, there's some people who actually have fully taught themselves how to trade just watching these videos. So anyway, I kind of I'm a little bit spoiled because Monday to Friday we actually have like a show director producer who makes sure that all this is done correctly, and you can see. When you leave it up to Brian, odds are he's going to screw something up here. Suppose I'm not that bad, but anyway, I'll have to fix that afterward. But pop on the channel. I think that's what they call these. Very, very valuable resource. So, on the what I wanted to show you, which actually I just never got to. I got totally distracted just showing you this, guys. But on the videos themselves, what we've kind of asked people is if you do find some value in this and you want to give back, we actually have an ETH donation wallet address. That's the only thing we really ask. If you do really find some value, what we really want to do is set up, at least I want to do, this was my whole sort of goal of this project, was to set up a booth in Decentraland. So all of the ETH that's garnered through these, which to be perfectly honest isn't a heck of a lot, but whatever we do collect, it will go towards buying the piece of land in Decentraland and putting a booth up and in operation. Anyway, I do have a couple of co-hosts. By the way, my name is Brian Beamish, for whatever it's worth, aka The Rational Investor. We do have a website that two principals and I have worked diligently putting together over the past few years. So I suppose we should probably call our website The Rational Investors. But anyway, this is the website. Actually, what is that? Nope, that's the Hangout. Where is the website? There's the website. So I don't know whether I'm even showing that on OBS. I might not be. But super stoked about the website. Actually, it's a 30-day trial. So if you're watching this through the week and you're kind of like, what the hell is this Beamish guy going on about in his website and all that? This is a really fun website. It's under construction. You can see we got some stuff we got to clean up here a little bit. But nonetheless, this is our basic dashboard. We've just added another component to the dashboard, a weekly commodity trend survey, which I'm really excited about. My 1980s website broker days, getting that back up and running. But also too, if you join, actually you can sit and watch. We have just ridiculous amount of video content on the website. That's our in-house daily brief shows. God, I don't even know if there's a number here. Does it even say? 121 pages. It doesn't actually, and you can see just day after day after day videos with actually really nice descriptions. You can even search the videos for specific topics. So super cool. Anyway, a little bit of a shill there for the site, and of course we also run a trading sort of education program. The education program is really more about just teaching you how to build and run a small business of trading. Everything from strategic planning, fundamental analysis, technical analysis, risk management, right? For the level 1 program, then level 2, we do advanced technical analysis concepts. Level 3, we do super advanced concepts. We open up a lot of different rooms, harmonic trading rooms, option trading rooms, day trading rooms, all that kind of fun stuff. So very robust education program. But unfortunately for you guys, anybody who's watching this video now, we just started our most recent education term. So at best, gonna have to get yourself on the waiting list for the next term, terms. Probably gonna start, I guess, in the fall, in September of this year. So can't wait. I'm super excited. I have a whole new batch of students on the site getting ready to rock and roll, change their lives, hopefully for the better. And if anything, this is a really, really good opportunity to get your business together. Because you can see Klaus's Great Reset. It's happening. It is going on as we speak. And interestingly enough, another fantastic component of the TRI site, of course I have to remember how the heck to get here, our blog. Again, this blog is actually free. This blog here, I use it extensively with conversations with site members. But one of the studies that we did earlier on in the year with a gentleman by the name of Larry Williams, a decennial study, was actually put together by another gentleman, and Mr. Buffett actually really likes the gentleman. I think his name's Graham. I can't remember. Anyway, point of the matter here is you can see first half of the year, garbage. And that's just about exactly what it is. I mean, it has been crappy. Second half of the year, oh boy, well, that's quite uppy. And I think this is all predicated on basically some sort of peak coming in on the inflation front. You're all now, and we haven't really suffered from the effects of inflation in probably, I think probably the whole millennial generation's lifetime. Probably really haven't had that much conversation, that much worry about inflation. I remember when I was a kid, watching it just tear my mother apart. She was a single mother in the 1970s. Oh, there's a party. And inflation just tore her apart. But, interestingly enough, whether it be things like the decennial report and the whole issue with inflation, won't get into that tonight. Here is a study of midterm election performance down in the United States of America. And, of course, I think, down in the United States, it's world's hegemony. I suppose we'll also talk a little bit about their crypto bill tonight and its effects on the crypto market. But you can see through one of their political years, have a pretty big congressional election down in the States coming up here in November. That's the general path for the equity markets. Again, really crappy first half. Notice we get basically through 6 months. So back half of the year, not so bad. So interesting how that also corresponds with the decennial sort of prognostication. January report or January barometer that we had sort of put together early in the year, it wasn't nearly as optimistic into the end of the year. So we'll see how the January barometer plays out. I mean, the long and short of it here is if we actually look at the dotted line here, that's actually what the sort of corresponding second-year new Democratic president, that's basically Grandpa Biden. Sleepy Joe, I think, as Mr. Trump labeled him, and sadly, you can really see his age. And you can see, unfortunately, market actually makes a new low just into that election event and his in this particular sort of historical comparison. So there's your backdrop of risk. I know that tonight and this conversation should really be about crypto. And we'll try and concentrate on crypto, but this is the backdrop, right? So I think we have to respect the fact that tough backdrop for anybody who is a crypto enthusiast to come. And I hate to say it, but man, the you can really feel it in the crypto Twitter CT, I think they call it. It's salty out there. I mean, it's not a happy time whatsoever. Very, very salty. So, do with it as you please. I suppose our number one job, and here's the thing, right, is if you're relatively educated at this game, you can spot a guy like this from 100 miles away. Don't take investment advice from Hollywood stars, Snoop Doggy Dogg, Gene Simmons getting involved in projects. That's not a justification to invest your hard-earned money. This clown, of course, he was actually convicted in U.S. court of, I think, wire fraud, if I'm not mistaken. Steven Seagal, last cycle, Floyd Mayweather, right? There's the TRIers can spot this stuff from 100 miles away. And congratulations to TRIers. I got to say, this community's pretty damn sharp. The problem is Joe Sixpack sitting at home. And you want to know who Joe Sixpack is? And I love him dearly. Don't get me wrong. Absolutely love the guy. And actually, how do I want to do this? I want to see what the boys are doing here in the room with me. Have Paul actually... in fact, I didn't even introduce them. Tisk. Oh, Brian, you're so bad at this. I just get off on a tangent and I forget. Let's take a moment and introduce my co-host. Not this guy. That's for damn sure. They both have their cameras off, so actually I think they're probably both gone to sleep. But I don't know, maybe not. Coming in from Florida, we have Ben, who's actually been with me since day one of the broadcast. He's been here all 48 episodes. Ben, how are you doing this evening, sir?
Super duper. Happy to be here.
Yeah, good, good. And actually, surprising enough, can I show you on camera? Am I allowed to?
Sure.
I couldn't believe it. It's actually snowing in Florida. Holy crap. So there he is. There's Ben. Hi, Ben. Wave to the YouTube
The
audience. Hey.
beauty of CGI.
See, look at that. I couldn't believe it was snowing in Florida. Imagine that. Here's Brian. Brian's hanging out with his buddy. And actually, Jesus, Brian's looking almost as scruffy as Sassy there. But this is my superhero. I love Sassy. Sassy, if anything, Sassy's my role model in life. And we have Ben. Ben's not, or I beg your pardon. We have Paul. Paul's, I don't think we're going to get Paul on camera. We'll just forget about that for the time being. But Paul, how are you doing today?
Good morning for me.
Yes, yes. Good morning. How are you this fine, sir?
Yeah, I'm just looking at the charts, preparing a new day for day trading.
That's good. Was that a good or was that a bad? I'm not quite sure.
Yeah, I'm good.
Oh, good. All right. That's a good.
Yeah.
Excellent. All right. So let's make sure I'm not totally screwing up this YouTube page here. Sorry, guys. Kind of got off on a tangent there. So my co-hosts, as I said, Ben from Florida, Paul from parts of Europe. I suppose I don't know. Does it matter if we? You're specifically in Romania or in Moldova?
Romania and Moldova is a part of the Romania.
Oh, okay. There you go. So I
Moldova
don't.
country.
All right. So I didn't. I thought Moldova was a separate country.
Yeah,
Right.
it is a separate country. But
Wow.
the
Okay.
same name is for the region in Romania.
Oh, so there's a region in Romania also
Yeah.
called Moldova.
Yeah.
Oh, I see. All right. Well, anyway, hello, sir. Welcome to the broadcast and welcome to the show. And good morning. And go have a smoke and a cigarette. Maybe have a couple. By the time you're done, maybe Brian will come up for air and give you an opportunity to tell us what you're seeing in the market. And I got to say, Paul's really kicking it recently. Has I think he has his trading plan down solid. He kind of knows what he likes to justify acting, and man, he's just in there trading away day in, day out. Very proud of the hard work that he's done. Actually, I think he's created quite a little trading community too. So hopefully this works as a nice sort of platform, sort of, what's the word I'm looking for? Springboard, right, for that. So. Hey, there's a couple people over on the YouTube page now, so did a little blabbing away and see a couple people have checked in. So who we got here? Raphael McEnroe, hello sir. Jun Chen, hello. I miss being in TRI. I'll be back in complete level 3 soon. When does the new intake start? It'll be, the next term will start in September. So, I guess that's when it is. And the good part about it is if you do get those 3 levels done, then we do grandfather you on the site. So you can just hang out, listen to the videos on a daily basis. I think we throw around a few half-decent ideas on the site. In this kind of environment, making a buck in the market's a bit tough. I would say now's a good time to play really good defense rather than aggressive offense. And actually, this is probably a really good time to sharpen up those day trading skills like Paul's talking about. Maybe that's half the reason why the good Lord has brought Paul into our world here. To remind us all that, number one, if you really focus as a day trader, you can do it. Number two, it looks like Bitcoin itself is quite day tradable. And number three, it's really a testament to patience and discipline and just doing the same thing day in, day out, rinse and repeat. And I get the impression for some people in this world, that's not too difficult of a task. Other people, it's almost impossible. But half of your job, if you're interested in becoming a trader, is you got to figure out whether this is even doable for your type of personality. And actually, just maybe a curiosity question, Paul. Did you ever do one of those personality surveys?
Yeah, I did.
And what did you come out as?
INTJ.
I'm sorry, INTG?
Yeah.
Uh, I'm just curious. What does an INTG look like? Because I gotta say, man, INTJ.
Yeah. Yeah.
Yeah.
Yeah.
Um, this is the intellectual. Interesting. Would you consider yourself an intellectual?
It depends on situation.
You know, I'm a pretty big fan of this. What's it called? Something Briggs. I can't remember. Stratton Briggs or something like that.
16 personalities.com.
Yeah. INTJ. It says the architect. Myers Briggs. Thank you, Ben. Actually, Ben, have you done this before? Did you figure out your personality?
Yeah, I did it a while ago. I'm ENFJ too.
Oh, you're an ENFJ like me, huh?
Yeah.
Oh, son of a gun. So, in a weird sort of way, these, and Paul's saying he's an A, so he's the A type. So, I think doing these kind of personality tests is a really good way to sort of figure out whether, a trader's life is really suited for you. And just be honest with these. If you are going to do one of these kind of personality tests, don't bullshit it because it's not worth it. It's supposed to just be a reflection of who you are. So anyway, super cool. Actually, that's awesome. I didn't realize that you had done this, Paul, and great to hear. ENFJ, and it always gets me sort of. I think that's what it is, right? It always gets me a little choked up because I love this kind of It's remarkable how the personality type really fits who you are. Because I fancy myself as a bit of a sort of, a kind of, the character references. And I don't know whether I've done this with you guys on this particular show, but whenever I do this and I look at, I don't know where it is. Anyway, one of the pages when I do this, I scroll down, it shows like sort of who in sort of a popular culture is an ENFJ, and the Morpheus character comes up, and I love to think of myself as a type of a Morpheus type of guy. And so actually Ben and I both are Morpheuses. Hey, can you have two at once? That's interesting. Are you? What's
Morphi.
Morphei? There you go. All right, so backdrop, tough market. You guys are having to learn about inflation and how nasty it can be. The irony of it all is that I would actually make the argument, and I suppose we'll leave the breadth here for crypto. We'll leave it down here. You can see crypto breadth does look a little heavy here. I would consider this when the moving average crosses the slow moving average, when the fast moving average, the red crosses the slow teal, and teal is sloping up. I consider that a bit of a weak signal, but it is a sell signal, and we were overbought as it is. And sort of the same thing with the broader entire cryptoverse. Not as overbought though. Interestingly enough, the broader cryptoverse just didn't catch that much of a bid. And of course, I suppose with the announcement out of the States or the leaking of documents out of the States about their potential crypto bill coming up here, we might even want to tonight. We in recent broadcasts, we kind of looked at the Bitcoin chart and sort of bigger. I think we in one or two recent broadcasts we did like the 64,000 sort of foot view. What am I looking for here? On Bitcoin from this perspective, and we did all about what's value and stuff. In fact, actually, somebody even sent me. Who the hell was it? Somebody sent me a brand new cost of production matrix and study. I think it was Andre, and Andre's so cool. Yeah, so it'd be interesting. This is the information that he found. So you guys tell me whether this is realistic. So your Bitcoin S19 miner looks like it's going to cost you about $5,500. Interesting, the metrics here. Would you agree with those? This Bitcoin miner S19 XP HYD, no idea what all that stuff means is, but wow, look at that, 255 T's versus 95 and 5,304 W's versus 3,250 W's. That's got to be better, man. It's just got to be better. So anyway, 20 G's. Oh my goodness. What the hell's going on in this world? I thought computer stuff was cheap. Anyway, so the point of the matter here is he crunched some numbers, and it was interesting. He's coming up now. You can see cost of production BTC and miner S19 XP 0.07 cents. I think that's the electricity charge. And then cost of production S19 XP hide, whatever the hell that is, 0.07 cents. Interesting how they're sort of bumping along here. At this looks like about 8,500 bucks. Frankly speaking, I kind of like that number. That number makes sense to me. And also too, I don't actually expect the price of Bitcoin to actually trade to these levels. I actually expect the price of Bitcoin to probably bottom at about a 50% premium to these levels. Because these guys don't want to see this go underwater. Right, and if anything, I might argue that we might have a situation when we do get down here. You start to hear about all the people that are running the slower, older rigs where their cost of productions are up here, and they've all are getting shut down. They start barking about 51% attack, 51% attack, all that kind of stuff. And that, I think, if you were like as a quantitative analyst, and you were saying, what are the criteria that I want to see that mark a quantitative bottom in Bitcoin, approaching cost of production, at or below cost of production, even better. That's sort of like fundamental analysis. And then what is the sort of the vulnerability of this product, this Bitcoin, this quote-unquote 51% attack issue, and do we start seeing that come to the fore? In a weird sort of way, it's almost like a contrarian indicator where the propensity of the 51% attacks way up here is extremely low. As price works its way down, the propensity for the 51% attack, and it might be interesting to even like say wonder if there's some sort of core what's the word I'm looking for, like an inverse correlation or some sort of word that's along those lines. Because I'm sure there is. Right now, even at this point, $30,000, nobody's talking about 51% attack. It's not an issue whatsoever. So, hey, there's Cotter. Cotter's an interesting character. Let's see what he says. I have way better prices for you on the miners that you have listed there. Connor's the type of guy where you're gonna walk around the corner in the downtown core, and he's gonna go, "Hey, buddy, you want to buy a watch? Look at all these watches I have. None of them work, but what the hell? They're cheap." No, I'm just kidding. You like that? Oh, Ben put his camera on for a big smile there. I guess he wanted me to see that he was laughing. Did you want to add something?
Yeah, I feel like I just need to show you every time I laugh, just to give you some feedback.
Oh, good. Hey, I appreciate it. And I also like the snow. It's pretty. I'm just having fun with you, Cotter. You're the fucking man.
I read a thread on the lounge where Cotter was going through his cost of production, and he was talking about how he takes the heat from the miners,
he's next level
and lowers his energy costs.
He's so next level.
Yeah, I want to see a diagram. I'd love to.
Yeah, well, there you go, Cotter. The gauntlet has been cast. If anything, somebody was asking to even today if Cole could come on the Daily Brief and talk some more astro charts. I think, Cotter, we got to bring you on the Daily Brief and tell us how do you build a chicken coop 101. And walk us through the steps of how, because he recently built a chicken coop for his wife, so now he's got a whole herd of chickens now and fresh eggs in the morning, so that's a bonus. But I think, if I'm not mistaken, I think he actually uses the mining rigs to heat the chicken coop. So it's like a double win.
Right. And they're all on treadmills,
Yeah,
generating
exactly.
electricity to run the miners as
Now
well.
that's using your noggin. In this world, there's no way Putin can touch chickens on a treadmill. Anyway, actually, you see this S19P? You see how that's, I don't know whether I'm screen sharing. It'd be interesting. Oh, there now he's getting pissed off. Yo, dudes, get off my back, man. You're awesome, man. But seriously, you got to come on the Daily Brief and show us how to build a chicken coop. Because if I pull this deal off in Portugal, I don't know how the hell I'm going to get on the goddamn airplane to get over there. But if I do pull it off, I want you coming over there to build us a chicken coop, or at least give us a video walkthrough from the other side of the Atlantic. Anyway, if you can see my screen here, this was actually Cotter helped me with some of his metrics come up with a cost of production for Joe's six-pack public. And if I'm not mistaken, Cotter, and you can correct us on this if you want, I'm not mistaken, I think he figures that that's actually sort of like businesses' current cost of production, which is fascinating. And of course, this is always a great conversation. Do we trigger Cotter here with a Hut reference? I don't know whether you've ever seen. All you got to do is just mention, well, Hut says in their annual reports, and all of a sudden he goes, you can literally smell the smoke coming out of his ears. And we're on the internet, so I don't know how the hell that works. Anyway, well, I'm contemplating it, June. The only problem is I've literally spent 2 weeks trying to book a plane from Vancouver to Porto, Portugal, and it's next to impossible. So I can't seem to get my act together. So I mean, it's definitely possible. Even had a plane ticket booked and paid for to London, and then we found out the connecting flights just didn't work, so I had to go and cancel that. So if I can get my butt over there, we're planning on a meetup in Nazarea. You know, I showed you. Want to see where the meetup is? We have a couple site members who are big surfer fans. So if anything, Shark Toshi, if you're watching this later on, dude, you gotta come. But where the hell's the? And now I'm getting off topic, so it's kind of a waste of time, everyone. Sorry. If I go over here. We are planning on having our meetup literally right at the base of this wave. Meetup's going to be right there. Isn't that incredible? Look at the size of that goddamn wave. Anyway, this is one of the places in the world that's got the biggest waves just off the coast of Portugal. I think it's called Nazaré. I'm not sure if I've pronounced that correctly. Nazaré. Anyway, in September. And part of the trip is to have a nice meetup and give everybody in Europe the opportunity, if you want to head on down to Portugal and party for the weekend down just outside of Lisbon. Second, a little bit of a vacation. I haven't had a vacation in forever. I think the last time I went away was I went down to LA back in 2018 before the 2019 before the pandemic nonsense. So, and then also too, Sjord is up there in the Netherlands, and so the question ultimately is if we do want to have a crypto operation, Portugal does have some interesting tax issues, and there's been lots of talk recently. There's a lot of FUD, sort of one leftist politician there, I guess, sort of said, "Hey, we gotta tax those crypto kids. They're getting away with murder." And the government went, "No, we're not going to be doing that." Okay, well, that settles that. So there are some interesting opportunities. Unfortunately, as an economist and a guy who follows long-term cycles, I am extremely concerned about a country like Canada for the next 20 years. Frankly speaking, I wouldn't be surprised if Canada itself, the country, doesn't exist at the end of this greed cycle that we're in right now. The last greed cycle, which the United States does really, really well, but the commodity countries do really, really poorly. Right near the end of the cycle, Canada had a referendum to break apart, and it was passed like 49 or 51 to stay together, 49 to break apart. So that could easily fracture, and the worst part about it is we are in far, far worse financial condition now than we were in that environment. In that environment, actually, Canada was at a very strong financial position. Now, Canada, the countries. You want to see what Canada is? I couldn't believe it. I even tweeted it out again today, and I'm not really talking crypto, so sorry, guys. But, I put out a nice, polite message to my politicians. You crazy socialist, quit doing this. This is basically Klaus's plan. He wants to turn Canada into a communist nation. And he's going to bankrupt all the bondholders while he's doing it. And the worst part about it is the guy who's his puppet, who's running our government right now, he's a minority leader. He never even got like a mandate from the population to do this over-the-top insane socialism, communism that he's doing. That's the craziest part about all of this. But I just reminded him today, oh, by the way, sir, nothing's changing. Nothing's getting any better here. What the hell's going on? You can see even today. And just think about it. If we were, just any kind of company, and we're the company, and we're just issuing bonds, coming out the yin-yang, don't care. You listen to the government; they don't even care what the public thinks. They don't care. So what's the market going to do? Would you hold a Canadian government bond in that kind of environment? No bloody way. And you can see the market is going, get me the fuck out of Canada now. Right? This is the government's capital stock. Canadian government bonds. This is a very, very bad sign for the country of Canada. It sucks. So, but anyway, it is what it is. So, to answer your question, and sorry I got so derailed there, I really like the idea. I thought it was interesting. Sjord, our CTO, has a spot on the weekly Daily Brief broadcasts on Tuesdays now. And he showed sort of relative demand for like high wages, which would be sort of like, the cost of living is very high in this particular part of Europe. And Portugal was very quiet. It was the lowest wages, the lowest cost, and we've seen there's a few properties in Portugal that look really, really attractive. I mean, the worst part about Canada, I would love to be able to build a foundation, an education facility in Canada, but this is insane. I mean, $2.6 million, and I wouldn't even want my mother living in this. This is a fucking piece of garbage. $2.6 million? So it's not so much that Canada's so bad, it's just that why have they gone and bid these prices up like this? This is ridiculous. So it's not really like Canada's bad, it's just Canada's overpriced and ridiculously so. And it might take, like literally, there was one economic agency in the world that came out and said that Canada will not get back into sort of a good sort of growth position for 30 years. 3 decades. So, It's not so much that I really want to move to a place like Portugal. It's just this is ridiculous. Nobody can live in these conditions. And there is one very specific reason why this has happened, but you're not allowed to talk about that in this world, which is really sad. But basically, Canada's a whore. You're not allowed to talk about the fact that, this is almost like your mother's a hooker. And of course, the kids on the playground, they'll tease you about the fact that your mother turned tricks, but you don't talk about that in polite company. But to all intents and purposes, Canada, and not only is Canada a whore, but Canada's one hell of a fucking high-priced whore. I mean, this is getting ridiculous. And unfortunately, this is just bubble, right? As soon as we actually get back to sort of real economics, I don't know when the hell that is, but this will correct itself. This is just nonsense. So anyway, that's why I'm thinking about moving to Portugal. Well, exactly. I mean, this is you could call it the fourth turning. You could call it Klaus's Great Reset. I mean, this is, in essence, that's the same. And somebody, June there over on YouTube, that's what this image is. So, when I was growing up, I was always curious, why the hell did this happen? There's the Great Depression, right? And, like God, I always forget these guys' names. God, I'm getting so old. All the great sort of stock manipulators all through here. Livermore, Wyckoff, even Gann was down in here. Gann even traded all through this. But the guy I'm specifically thinking about, Jesse Livermore, right? He's probably the perfect analogy of this. Ironically enough, Jesse Livermore actually committed suicide right in here. So, if a guy who's like Jesse Livermore, Mr. Capitalist, I make just gazillions of dollars. And then something has changed so dramatically in his life and his mental set. And even like one of his last sort of letters to his wife was like, "This is my last go, man. I just can't make anything work." And I might argue that, especially in this like Greta world, in this Klaus world, in this, Justin Castro world, it's very similar. The little guy just trying to actually just like turn a buck on the street corner, that guy's screwed in this kind of environment. It's tough environment. Anyway, so how on earth does this happen? Like, what's going on here? And the worst part about it, of course, is I was a kid in the 60s and 70s, and so people would always be like, well, it was just all the GIs coming back from the Second World War, and, the GI Bill, they all went and got college educations, and so as a result, the economy expanded dramatically, when in reality, that's not real. That's not actually what happened here. What happened here was we went through a generational bubble. The banks, of course, we know that the banks actually took over the system right here. The famous Woodrow Wilson Christmas sellout. And interesting, what do the banks initially do? They go and just lend tons and tons and tons of money and let the stock market get bid up to crazy ass levels. And then they pull the credit and you either pay back the loan that you borrowed. Remember, most people that played this market, especially when the stock market went crazy here, but think of it like Groucho Marx. Groucho Marx is the perfect example of a guy who played the stock market through here. He lost everything through the crash and the Great Depression. And he was like a big player all through the 20s. But they pulled the credit very much like the 2008 financial crisis in the States, exactly the same. They pulled the credit, and of course, anybody that was margin called, poof, you got wiped out. And they kept credit really tight through all of this. And one might argue that the whole reason why they did this was to officially take over the system. Now, what happened here? You see, Bretton Woods. Well, to get the economy going after this crash, keep in mind the guy who was in power in Washington here, he said, if you speculate in the stock market and you lose money, it's your own damn fault. What are you doing going and speculating? If you're going to speculate, you better know how to do it right. And if you don't know how to do it right and you buy on margin up top here and you get margin called and you get wiped out, I don't have any empathy for you. But because the banks were really juicing this crash, right? They really ramped it up. The socialist message was over the top. Basically, he got run out of politics on a rail, right? Worst villain in human history, at least American history. And they kept the taps on very, very tight through the Great Depression until Mr. Roosevelt, who came into power here, basically said, you know what? We will go and buy all of those bad bonds back. We, the U.S. government. And the right-wing people were like, oh my God, this is fucking socialism. This is communism. This is, the everything that we hate in this world, the Ruskies and all that shit. And they did it through an agency called the Tennessee Valley Authority, the TVA. And it was like the socialism of socialism. The issue, and here's the kick in the pants, is that by the U.S. government going and buying all those bad bonds and just sort of resetting the system and, of course, giving new cash in exchange for those bonds, in essence, increasing the money supply, putting the bad bonds over there. Does this sound a bit familiar? They, in essence, could reset the system. The bad bonds are over there now. You don't see them. Don't look at them. They're over there. They're in that Tennessee Valley Authority. And issue a whole bunch of new cash. Now, what does that mean? M2 money supply expands dramatically. And they blame it, of course, on the war. How convenient. Nice big fat war. Do yourself a favor and go look at the actual reasons why the United States and Japan actually went to war. Actually, the United States actually provoked the Japanese. So that's an interesting historical piece. And there's a lot of debate that says that Mr. Roosevelt really wanted the Americans in the war. Why? Well, because it makes a great cover for this massive expansion of debt. Well, it's the war. We're fighting the war. Hey, do your patriotic duty. What are you, not American? Are you unpatriotic? What's up with you? I think you better go off to the concentration camp. What did they call them? They called them conscientious objectors. Well, you go live in the desert, you conscientious objector. Point here is they moved the bad bonds over on the side sheet. They injected new cash in the form of government spending, and they, Tennessee Valley Authority, all that kind of stuff. Right, and of course, military spending, military contracts, build up the military machine. Hey, all the military people, they love that. And that set the stage, or in essence, the resetting of the economy. Here, so that was basically, 80, 90 years ago, the last money cycle. And you look at these charts, they look a hell of a lot very similar. The difference here, though, is that this is with the government taking the bad bonds and moving them over there onto that balance sheet, TVA, big new government agency. That's where the bad bonds are sitting. Over here, this was just purely, they are going to just print their way out of this. Just keep printing more and more and more and more money. But in essence, it's the same thing. And the difference here, of course, is this actually turned out, the Tennessee Valley Authority and the ultimate sort of end game of the U.S. government buying up all those defaulted bonds, it actually turned out to be a really, really good investment. One of the best investments the United States of America actually ever made. Louisiana Purchase was probably one of the other, just ridiculously good investments the United States made. Probably, the purchase of Alaska. That was another really good investment. Anyway, point of the matter is, this go round, does the U.S. government own all of these bonds that are put over there? No. The banking cartel that said, you know what, if you want to do that, fine. U.S. government, you go and do that. They saw how much money the U.S. government made on that deal. And I think this go round, they said, no. We're going to make that money, not you, U.S. Uncle Sam. So that's that's kind of, and you see the devaluation of the currency right now. That's purely a function of the fact that they have just, we all know this Fed's printing money. I could show you the M2 money supply going crazy. But in essence, they're setting the stage for the next big economic expansion. It's going to happen. I mean, there's really no choice. They've cranked out the money supply like ridiculous. Now I think the U.S. economy is something like 20 trillion or something. I mean, I don't know whether you realize, but back here, the economy was like 3 trillion. You telling me in this past 20 years, the economy itself has actually grown tenfold? No. It's just they've printed that much money. So it has to be that big now. Either two things happen. Either the economy stays that size and we accept this bullshit new world that we live in and the inflation that you see at the grocery store and at the gas pump, that is us accepting this. Or the alternative is we find a new hegemony currency to start the process. And frankly speaking, market hasn't found a new hegemony currency proxy. We're still stuck with the US dollar. As far as I'm concerned, I haven't seen any realistic alternatives. I can tell you right now, I personally would not give Vladimir Putin a penny of my money willingly. And he's just destroying the Russian military base here. Just imagine how much it's cost them with this campaign here. I think he was kind of hoping this would just be a quick little exercise. And it's turned into a very, very costly exercise. Could he come along and all of a sudden just say, I'm going to nationalize this, nationalize that to pay for things? That's what totalitarian dictators do. And I would not take a chance giving money to Winnie the Pooh. I think that's a worse scenario than Vladdy, because technically somebody could come along and knock Vladdy off and then be sort of like, okay, West, we want to, make peace with the Eurozone, make peace with Ukraine, and try and stabilize things and get us back on course. Ironically enough, I don't know whether it's interesting. Winnie's got a big showdown here this fall. He has in CCP China every few years, I think it's every 5 years, I'm not exactly sure, they have to sort of reaffirm that Winnie the Pooh is the guy. And there is talk. I have heard a few people, social commentators and stuff, who are kind of in the know, listening to them saying that, he's got a bit of a challenge here. He might find that there's actually some dissent within the Politburo about giving him sort of carte blanche. So we'll see how that goes. I mean, it's interesting. Having said that, would I go and give a Chinese company my money blindly and just expect my money, or sort of like even the Chinese government buy one of their T-bills or something? No, I wouldn't. I mean, it's kind of irrelevant what I think, but I wouldn't. And I would strongly suggest you think twice about doing something like that. It's very dangerous. So, no other alternative hegemony. And as I showed you with the Canadian government, the worst part about this is, we look at the U.S. and go, okay, well, U.S. and Fed and all that kind of crap. But believe it or not, actually, I would make the argument that the U.S. isn't that great, but it's a hell of a lot better than the alternatives. I mean, are you going to put your money in the U.S.? Or are you going to go and put your money with somebody like Justin? I mean, this is, oh my goodness, this is such a problem. If anything, let's hope to God that we're coming near the end of this, because now the market's like gapping lower on a weekly basis. It's like in free fall here. Oh, God. So, I mean, who do you trust? to be perfectly honest with you, I think I would, and this is the worst part about it, is I would actually trust a banker who wants to try and fee me to death and who wants to try and hit me with service charges and interest fees. But he's really a big fan of the legal system, and he will use the legal system to steal your money away from you. What's scary, like a country like Canada, the leader has actually made a precedent. He actually set a precedent where he literally went in and stole citizens' money from them. No ifs, ands, or buts. That money that's there, it is now mine, gone. That's really dangerous. And that's probably half the reason why a lot of these international investors went, holy shit, did you just see what he did? They're selling. So it's not really like the U.S. is so awesome. It's just all the other guys are just, they are even worse. So that's why I say it's not really like the U.S. is so great. I mean, it's got its warts. But I think its poop stinks the least in all of this. Crazy market. So to answer your question about the fourth turning, that's what I think is going on here. Actually, it's just business as usual. This is all about generations. And unfortunately, it's also about how do currencies get manipulated by the bankster class to facilitate their desires. Rothschilds, they famously said, I don't really care who's going to control the country. If I control the money supply, I make the rules. And frankly speaking, over the past 10, 20 years, watching the way the market has developed, I can understand now completely exactly that argument. And I think that the Rothschilds are 100% in control of these Western societies, regardless of who's at the political helm. And I know we have one site member who sent me a very lengthy message today. Basically, I think his message was, don't get fooled. Whether it be the left-wing political party in the States or the right-wing political party who's technically in control, really, at the end of the day, the banksters run the show. So, anyway, I would not be surprised if over the next maybe couple of years we get some sort of official Bretton Woods reset, and then you'll know that Klaus's great reset has actually happened. And the funny thing is once we get on the other side of that, actually I could see a fairly substantial period of growth ahead of us. All the cards are in place, which is most interesting. It's just a question of we got to get beyond this sickness, and we have to get beyond this quote-unquote great reset. They have to get it over with, get it done. Unfortunately, us little people, we don't really have a hell of a lot of choice in the matter. I think that our choice in this matter was what were you going to be invested in, right? If you were someone who actually owned assets. And, here's a good example of that conversation over the past, 20 years. If we just zoom this out, oil prices, there's George Bush's peak. I know a lot of people are barking about high oil prices, but I'd actually make the argument oil prices are really not that high right now. Stock prices, you can see they're forming this inverted head and shoulders. And if we can sort of muddle along here and then start poking our way above this neckline, well, we should start getting into rally mode. Right? And that's actually this conversation. When does this kick in? It's probably a good couple of years down the road. I don't think it's today or tomorrow. Also, too, when you look at an image like this, you can clearly see that Bitcoin served its purpose here. Interestingly enough, gold did serve its purpose the first half. This is like George Bush's presidency. And, of course, there is George Bush Jr.'s crude oil market. And then, literally, you notice that, this 2011, there's, I guess, was Bitcoin around that long ago? Oh, yeah, there we go, 2011. You can quite literally see it was almost like the baton was handed off from the gold market to the Bitcoin market, and now Bitcoin actually did the heavy lifting of offsetting that inflationary pressure. And interestingly enough, since 2011, ironically enough, the gold market actually has done almost nothing. In fact, it's gone down quite a bit. So Bitcoin, I think, did its job. And I think, I've said this repeatedly. Of course, I don't know how popular it is. But, George Bush family, of course, they all ran this market up. They knew that this was a commodity cycle, the fear cycle, that commodity prices were going to do well through this. Of course, the dot-com bust, that's where the tech stocks collapsed. That was at the turn of the century, and you notice turn of the century, that's when oil really got going. And that's sort of first 8 years, and that's George Bush's presidency. War on terror, all that. I might argue that really, gee whiz, they sure bankrupted the country. The gold market, of course, ran up into that. And then I think what happened was that everybody that was pro-commodities, sort of historical Republican Party member, they all left Washington like en masse. And I believe that they actually put this Bitcoin product in place. Remember, it got its start in 2008. What a coincidence. There's 2008, folks. Bitcoin got its start there. And literally, I would even argue that the day that and I think that it was all very coordinated, that the right-wing political party down in the United States said, that's it, it's time to pull the plug, let's get the hell out. They all went and loaded up on Bitcoins. And they did very, very, very well. While everything else in the world got pretty much smashed over that intervening time period, right? If we, since Bitcoin's been around, there's 2010, there's 2008, there's the relative performance in the stock market, which is okay. Don't get me wrong, it's pretty good performance. What is this number? It's not going to give us a number. Anyway, there to there, just basically coming back to the levels that we saw there. That's the whole stock market performance since the great financial crisis. There's Bitcoin. Like, holy bejesus. Look at that. That's like 300 times from these lows. That's like 0.25. It's not even remotely similar. So, has Bitcoin done its job through this fear cycle? Yeah, I think it has. I think it worked admirably. I do think that Bitcoin is an excellent store of value play. I think it's really, really good. The only problem here is, and this is getting back to this conversation, is what price are you actually going to pay for your Bitcoins? That's a different conversation altogether. And if you had the balls to come in and buy reload zones, then of course cost of production, I think if you can get within 50% of sort of the base cost of production, you're doing fine in a commodity. But you did great. But if you come in and the price, you can see the cost of production models are down here, and you come in buying up here, and you're expecting to knock the cover off the ball, well, and unfortunately, you're just going to have to learn the hard lesson that that's not a good idea. But the issue I have, I suppose, now is if we actually look at these Bitcoin cycles, I think we're about halfway through the bear cycle here. I don't think that the 1 year sort of sell-off in the corn, I don't think it really officially ends until like November, December of 2022 here. So I think we've talked lots about this. I won't walk through any more of the TA here, but that's sort of the backdrop of what I'm thinking, and that's sort of like value down in this area here. And if we follow previous cycles, I don't see any reason why that can't be the same. The interesting conversation here is going to be, does Bitcoin actually trade to new all-time highs next cycle? If there's no more quantitative easing and they actually start doing quantitative tightening, then I don't think so. I would say that Bitcoin is an excellent commodity proxy, excellent store of value proxy. And I wouldn't be surprised if I talk to some people and they say, Brian, I bought my Bitcoins at 50,000 US dollars a piece, and maybe we'll be down here bumping along for years and years and years. And he says to me, I ain't selling my Bitcoins until I see $50,000. And I say to him, oh, gee whiz, sir, I think I've had this conversation with you before. If we look at our beloved gold market, I used to do exactly the same thing. Well, not exactly the same thing, but I was a broker's assistant, and really back then, that meant that I just lived on the phones prospecting all day long. And I used to talk to guys constantly through this cycle. This is the greed cycle. Dot-com boom. It hits its peak here. It's not like gold disappears. It's not like gold goes off the board. It's just we're not in this face rip insane moves up environment anymore. Yes, there's some volatility, and the interesting thing is there are a lot. I remember in this part of the market right here, there's a really famous VSE promoter by the name of Murray Pezim, who used to make tons of money promoting gold stocks. Was gold a rip-roaring buy that it was going to, go to the moon here? No, actually, we're stuck in a trading range, it looks like. And I get the feeling that that's probably our future. We're going to be banging around in a range. And if you just think about it in simplest terms, I don't know whether I buy this kind of cost of production idea. I do buy this kind of cost of production idea. So we also know that the next halvening is coming up here. So, previous cost of production through that last halvening was, $2,000-$3,000, somewhere in that area. And you can see there is the halvening event and all the prices go ratcheting up. Could we work our way back down into here and then bump along, and then we have a ratcheting up on the halvening event or after the halvening event? And maybe we're back to 20, 30,000, maybe even 40,000 again on this stuff. I could see that. That wouldn't surprise me. I'd be really interested to see if Bitcoin can actually go to new highs now that we're actually on the other side of this commodity cycle. This was the friendly part of the cycle. This thing did exactly what it was supposed to do as a store of value hedge in the marketplace. It worked. And more importantly, and this is what I think, is it stole the thunder out of the gold industry. There are a lot of people, and really I might even argue, with all of the ETFs and all of the various different gold products, the market was just saturated, and the public owned tons of gold, and they still do. So there was no way in hell the U.S. Federal Reserve and the powers that be could let gold do what it's supposed to do in this inflationary scenario. They had to find some sort of alternative and something that would capture this generation's imagination so that they wouldn't go running into gold. Because remember last cycle, I showed you that Great Depression cycle, this over here, they actually had to make the ownership of gold illegal in the United States to somehow bring this thing under control again. Thank heavens they didn't do that. This time around, they didn't make gold ownership illegal. What they did was they said, hey, all you millennials, you live in the digital age. You don't want to buy your grandpa's inflation proxy. You want to buy this internet proxy of inflation, this thing called Bitcoin. And I think it did the job perfectly. All right, there's your rant. Rant. Obviously, you can see I'm still value-wise thinking price can work its way lower. Be interesting to see how many of this sort of newly minted Bitcoin mining operations even survive when we're down here. My hunch is a lot of the fly-by-night places, they're going to get washed out, and probably a lot of stock delistings and stuff. And as we go through this next year is going to be a tough slog for this crypto space. Make no mistake about it. Probably, and if anything, they often call this like the developer cycle. Remember Alex Sturck, when we were going through this, he was begging for a developer cycle. So that's what this environment is. You can see I'm highlighting or circling on the charts over here. And the problem here, of course, is that this is so long and it's so relentless and it's just one directional that by the time we actually get to the bottom, nobody in the public is still interested in this. I mean, right now we got like 25 people watching this. We got Ben here. We got Paul here. You guys, yeah, you will be watching this stuff, and hats off to you. But there were like in that Doge run up, there were like, I mean, it was ridiculous the amount of crypto Twitter that was out there, and just the most lunatic places that had like hundreds of thousands of viewers and hundreds of thousands of hits and stuff. And by the time we get to the bottom, all of those people, they'll all be gone. And hopefully, if we're lucky, we start the whole damn process all over again. And I think there will be some money to be made on the other side of this. I just don't know. Now that we are on the other side of the fear-greed cycle, I just don't know whether we're going to see new highs. Now, what's the one thing that will, of course, pretty much guarantee that we will see new highs? And interestingly enough, if we go back to our political I don't know what we call this, forecast, you notice under Mr. Biden, and it's interesting, and Cotter was telling the lounge earlier today, Mr. Biden is even warning the public that the inflation numbers could get absolutely insane. What happens if the economy just doesn't come back? And the economic data, and keep in mind, right, we're expecting a counter-trend rally here, July, August. My hunch is the year-over-year comparisons, inflation-wise, are going to abate here. I think this June period, Mr. Powell himself even said that the worst year-over-year comparisons were May, June. So I think it's going to be damn ugly here through June. But once that's done, then I think we get a little bit of an ebb and flow. You notice that we rally back, but notice once we get into August, September, notice, here we go. We're heading back down, and boom, we actually go to new lows. So what does that mean? Does that mean that the equity market is on its heels? It's on its knees into this political event? And does the Fed need to, instead of quantitative tightening, they actually have to go and do some more printing? If they do, and they get rid of this, hey, we're going to be fiscally responsible, we're actually going to reduce the money supply, we're going to try and get the country back on a solid footing, we're going to start trying to give these currencies some underlying value. If they actually do that, and I don't know whether they will or not, but I guess we'll see, then I think that the Bitcoin top is in. If, however, there's more burr, there's more printing, more socialism, maybe they completely tank the economy because a whole new variant of the sickness mysteriously pops up out of nowhere and everybody's all locked down again. Who knows? Also, too, remember I said that Winnie the Pooh has his big sort of showdown here this fall. Maybe, he's got half of the damn country under lockdown now. Maybe that continues right through that event. He wants to make sure everybody is in their prison cell and everybody votes Winnie the Pooh, and then as soon as that's done, maybe then they relieve the pressure. I don't know, but all I'm going to say here is I don't think we're done until we get through this election in November. It is going to be, first 6 months of this year were tough. I think once we get through the end of June here, we should enjoy a little bit of a counter-trend rally. But once we finish that into August, September, get ready for more fireworks into that election. Looks like probably Halloween this year is going to be a really interesting event. And once we get on the other side of that, then I think, hey, the chances of the market rallying back smartly. And what I find interesting about this is what would cause the stock market to just jump violently like this? Is it the return of the Republicans back into control? Is it that the massive stimulus by the Fed saying we have no choice, we have to print more, whatever? I don't know. But you can definitely see something out of that November event. The market's going to rocket higher. I got a funny feeling. If I was a betting man, I think it's because the Republicans are going to come storming back into power, and they're basically going to make all the socialists and this whole sort of, socialist push that we've seen in Western society, they're going to put the brakes on that. So that's my vote. We'll see what happens. Somebody remember that and remind me on election day, and we'll review. All right, well, blah, blah, blah. I wasted, geez whiz, about an hour and a half there blabbing on and about nothing. I sure hope you guys got some value out of that. I hate when I do that because I wanted this to be strictly about crypto and Bitcoin, but I end up just there blabbing away endlessly. Okay, so let's try and get back on track here. I do have two co-show hosts. Well, it might be that oil goes to $200-300 a barrel, Cotter, so that might be the linchpin. That's another thing that could happen here. All right, so in the microcosm, what did Bitcoin do over the past week or so since our last broadcast? We met on the 1st. That was basically right here. Interesting. What was the price that we used for the show? Look at that. At the beginning of the day on the 1st, the price was like 31 and change. And by the end of the day, it was 29 and change. That's a pretty big fall, eh? What did we have here? We had 29.7. That's interesting. So they reported a gain of about, what's that, about, not much, $500? Because that's about 1.7%. I'm not quite sure what the cutoff is here. There's 2.8% gets a yellow. I was asking the guys earlier, 2.9% gets a yellow. I guess it's 2.5% and higher gets a yellow. So I voted yellow last week, but looks like I missed it just by a hair. I suppose if we had had this conversation yesterday, I would have done great. This is a really interesting environment, eh? So much you can talk about off of this chart. I will just say that, I guess what we want to do is 29.7 we said last week, so that's in there, right there, eh? That area there. All right, so that's where we met last week. How did we do over the week? Right there. Let's maybe change that to white, and we'll make that really big. Here we are here, slightly higher. If I'm not mistaken, I think I remember, Paul, didn't you say that you had a long setup in Bitcoin that fired through here?
Yeah. A 4-to-1 raise to reward.
Cool. And actually, this is so typical Paul, right? Because Paul, if I understand correctly, he really likes the Mountain Man level. Although, geez, that did that again. Remember we had that happen before. Mountain Man. But, oh, look at that. Did it again. Bastards. What the hell? I'm not sure how I'm supposed to get the M. Maybe I have to go and select it off the list. Looks like, man, they used to have a ton of symbols, but look at that. They've really, whittled it down. That would suck. Did they get rid of the M? That would suck if they got rid of the M. Maybe that's why it's not on there anymore. Let's try Hogue. Is Hogue there? There's Hogue. Oh, they must have gotten rid of the M. You know what I got to do then is I got to find another M and copy it over. Where's an M? Give me an M somewhere. Oh well, I guess I can. Oh well, we'll just have to. You have to take my word for it. 61.8 we like to call Mountain Man level. And interesting, you can see the W's forming off that level. So, great trading as always, Paul. Nicely done. And interesting how we ran up into this Mountain Man level. Was that your target on the upside? The Mountain Man level on the upside?
No, I use 50% rule
Oh, okay.
to explain my trade.
Geez, I guess so you were conservative. Imagine that.
Yeah.
Then we went and M'd out. What was really interesting about this M, and I had sort of written, publicly posted, that we just rallied right into a Foggenbaum level, right in the middle of that reload zone against that original structure and just stopped on a dime. So you could see that the market just ran out of steam right there. Double top, which interesting enough created Foggy going down. I don't know. See, now this is an interesting conundrum I have here about Foggenbaum. I think that was well respected there and then there. So I think that was important. I was a little surprised why that Foggenbaum level came out there and we stopped there and didn't make our way all the way down to that Foggenbaum level. That surprised me. But nonetheless, I think what happened here was, you see this chart. It was so pretty. I would imagine there were a lot of guys that said, this is it, folks. It's straight up from here. It's pretty bottom, right? Like Paul was saying, he went long off of here. If anything, really, really good testament that you better take some profits. I like the idea, for whatever it's worth. Let's say I did buy this W. It's awfully big, but, let's just say I did that. If you can get up into that sort of 2-to-1 risk-reward ratio number, so that's basically up into there, then you take at least partial profits, stop to scratch on remaining. That's a terrible fill there too, right? Where's the double bottom? Double bottom's there. So actually that's probably, interesting. Look at that. It's right, basically Mountain Man. So that's just basically buying this W. All right. Down, up, down, breakout. I'm risking against there. It's pretty straightforward stuff. That's the irony of it all. So it doesn't surprise me Paul took that trade. That's pretty much exactly what I would expect out of him. He's a very good trader. So rallied into reload short zones. If anything, this is a really, really good example of a ranging market state. And you notice that, of this huge range, you get just these little slivers. And really, you might even argue that this rally window was like that. So the whole market range, this was the repricing up. This little sliver was the repricing down. This little sliver was the repricing up. This sliver here was the repricing down. Most of the time here is actually spent just chopping sideways. So really good analogy that markets like to range 70 to 80% of the time, and they really only trend maybe 20% of the time at best, maybe 30, but probably more like 20. So Paul grabbed some quick profits. Way to go. Lock in some profits. I think that's a good idea. If you moved your stop, kept a bid on the books, moved your stop to scratch, well, boom, got slammed out. Or maybe on this M you took all profits. It's up to you, really. Hopefully anybody who did buy this level didn't lose any money on this. That would be a shame. But what I definitely see, and I put a tweet out to this effect earlier, is this to me looks like a textbook, and then we went after the stops, right? There's the low there, and you see, look how close this low tag is. This is almost heartbreaking, because There's some people that just put their stop just below these low here. And look at what they did to them. Oh, so frustrating. It happens in this game called trading. That's why, good idea. Pay yourself a bit on the way up. Move your stop to scratch. Don't let a winning trade turn into a losing trade. That's psychologically very debilitating. But this to me looks like it was total sort of market manipulation by, the Goldman Sachs's, the Citadel Capitals, right? We all know what they did to Luna. The, Joey Diamonds of the world. You all know where he works. Not really doing a lot of damage off of the higher time frame charts. I mean, the interesting thing about all of this right here is, if you believe in sort of bottoms, well, there's a low, there's a high, there's a low. You buy on a breakout there, your stop is there. So all of this in here is actually just fluff. There's nothing really going on here. Now, what I would say, which is a little bit concerning, but you should be mindful of this. This trend line right here is probably your make or break for Bitcoin. If we actually start going and structurally putting in tops below this trend line, then we're probably getting ready for that next leg lower. This is a lower time frame chart, right? This is going to be like the Pauls and stuff, day trading. Now we're threatening to start actually talking about higher time frame setups. And I think that's what this image is. So as it stands, we've been really, this is now a 4-hour CME futures chart. And I think on balance, and I think, I don't know whose chart it was that I think I was showing somebody's chart earlier. But on that chart, you saw this pattern. A, B, C, D. Oh yeah, you know what this is? This is Andre and his cost of production chart. So I had Andre's chart here in the back of my brain here. A, B, C, D. These are the higher time frame participants now starting to really take a good look at this market, right? And unfortunately, like I said, their signal that you got to get ready for the next leg lower is we start structurally failing below this little uptrend line that was established recently. So where is the darn drawing tool thing? Where are you? Okay, what did I just do there? Let's try that again. There it is. All right, that's that line there. So if we zoom in on this, you can see we came down, tested once, came down, tested again, put in a little bottom and recaptured it. That's good. That latest counter trend rally that I think was based on the dissemination of a report that's being put together by the U.S. Congress on how to regulate cryptocurrencies. Interestingly enough, when I read that report, and you can find it if you haven't read it, it's probably not a bad idea to sort of bring yourself up to speed. Here, this, nope, where the hell is it? I thought it was in here. I had a hard time finding this earlier today. This gentleman, thank you, Drew Peanuts, and I love this. His name, oh, actually, no, that's a different guy. Well, thank you, Drew. Somebody else sent me one, their name on Twitter was Do Kwon's father, or Do Kwon's dad, which I thought was hilarious. Anyway, this person here sent me this, and they said, well, probably the market jumped on this. Because frankly speaking, looking at this to me says, and this is actually where I'd like to get my show course participation here. Ben, wait, are you familiar with this crypto bill? Did you read any of this?
No, I haven't much to check it out.
All right. And Paul, did you read any of this?
No, I just look at the
All right.
smaller
Well,
time
I'm sure
frames on Bitcoin.
glad I checked in with my co-host. Good thing I got him here. So when I read through this, and it's interesting the different takes on this. The number one message I got out of this was that if you even hint that your cryptocurrency can be used as some sort of bartering instrument, and actually there was even a better how did they describe it? Here we are. Amongst all clauses, the one that stood out was that if there is any debt, equity, profit revenue, dividend of any variety, and think of what Mr. Luna tried to do with his 15-20% APR and all that, then the underlying asset would not be labeled as a digital asset commodity anymore. It would actually fall under the regulation of the SEC as a security. And I think that really the one place of the market that I think is in trouble here because of this is, of course, DeFi. I think that the regulators, when they saw when they saw what DeFi was doing, and then number two, saw the attitude of people like Do Kwon, who just basically gave the U.S. government the bird, for lack of a better term. Number one, they were going to let's release the hounds and bring this character back down to earth. But number two, they're now going to put into place that, hey, you really want to play in this game, you better play ball. And if not, we're going to drop a ton of bricks on you. So I thought that was really interesting. Now, the one thing about this is it has nothing to do with Bitcoin, really. In my opinion, reading about all of this, it had everything to do with things like if you have your tokens or coins or Bitcoins on an exchange, and that exchange happens to be a publicly traded company and that go bankrupt, you are due your coins back, which I think needed to be clarified. But then also, too, what specifically does your coin do? And if it looks like a duck, acts like a duck, smells like a duck, quacks like a duck, Mr. Gessler, in fact, actually, this is one of the reasons why I have his video on our YouTube page. And I think it's required watching of all of you crypto enthusiasts. That's a line directly from his lecture. I mean, this is probably crypto's biggest bugaboo right now, is this gentleman. You better play by his rules, and if you don't, he'll drop the anvil on your head. So I have this specifically on the feed because if you fancy yourself a crypto person, you better get to know him. Right beside him, of course, I also have the video of the Money Masters. If you want to play in this capitalist world and you want to really understand what the banksters' motivation is and why they're doing this, you better watch this video. So the bottom line here, and then, I think this is a really good dovetail video also for the public on this by Ray Dalio, his famous free video on how markets work. I think it actually dovetails really nicely with the Money Masters video, so you can really understand how the banksters actually run our economy. And then there's a couple other videos that I really like. I'm a big fan of cycles. So I think it's a good idea for you to get yourself familiar with cycles. And I think we have a few other... Oh, yeah, Mr. Jenkins explaining Gann time sequence. That's a really good video. So, I've told you before, I think this YouTube page is absolutely invaluable as a free resource for all of you guys. You should all watch all of these. Oh, and by the way, there's Josh, a little cutie. He's actually Mr. TRI PMA. Of course, Brian, he's saltier than a salty biscuit. So it was a good idea for TRI to move in this direction and have a sort of an official PMA guy. And I even was joking with the I don't know whether it was with my co-show host or tonight, but Brian's a bit salty, so I need more Josh in my life. I want to get to know Josh. He even has his own YouTube video stream, and we feature him on there because he's such an awesome guy. Anyway, also there's our level 1 instructor. I think I told you I was so impressed with his talk with the level 1ers this last weekend that I asked if I could actually publish just a little clip of what he was talking about on Edge. It was so good. Okay, so back to our conversation. Sorry about that. The point here is each cycle I've seen the speculative altcoin part of the market basically fall apart in the sort of non-bull 4-year parts of these cycles. Actually, you want to see a funny story. The very first cryptocurrency I ever bought that wasn't Bitcoin, mind you. Yeah, I think the only reason why I bought it is because somebody gave me some Bitcoins. It was a coin called UTC or something, and I bought it on Crapsy or Cripsy. I don't know whether you guys remember Cripsy or not. But that was I want to show you this one. That was right here, I guess. Yeah, I guess into the end of 2013 here. And you can see, of course, that was the end of a cycle. And interestingly enough, through this cycle, 13, 14, 15, I mean, all the altcoins just went basically to zero or a fraction thereof, like 1 sat kind of thing. And then, we actually started our official altcoin portfolio at TRI, the one that I report to you, when we started up the company in middle to the late of 2014. And this is the cycle there, and there that we took like $500 in the altcoin space, and in this cycle ramped it up to a better part of $1 million. I mean, it's a little ridiculous. Didn't really do a hell of a lot this cycle. This cycle was all about DeFi. And interesting enough, dog money. I made a bunch of money on the dog money. But I thought it was interesting that then the funny story is, like, I originally bought that UTC. I noticed that the UTC, into this cycle peak, I looked over, and I can't remember where it was. It was still trading on Yobit or something. My Crapsy coins disappeared when the site exploded. But I noticed that the UTC coin on Yobit actually got back to my original buy levels. And then I noticed this cycle, basically the same thing happened. The little altcoin portfolio, we took, I don't know, maybe about 200,000 or 300,000 out following this peak, because the whole point was to take 500 and turn it into 100,000. The fact that it went up to close to $1 million was almost a joke. So at this point, we took a couple 100,000 out, paid a bunch of taxes, bought some gold, put 100,000 in the bank, feeling pretty good. And literally through this period here and this period here, the rest of that stuff went down to, like, I think the account went down to like about 20 or 30,000, whatever was left over. And sure enough, by the time we got into dog money environment last year, and not so much this year, but we started to get a bit frothy when DeFi really got going there. Remember, Luna went up to insane levels there. The altcoin portfolio was back up to about $400,000 or $500,000, not really doing anything. So, ironically enough, actually, that's exactly what I expect to happen here. It's just really a question of, do these centralized exchanges, do they go and delist more and more and more of these altcoins, and these altcoin ideas themselves, if they are a security, do they now run into problems with the SEC, and that's the reason why the market's going to come back down to earth? or do they just turtle like typical shit coins in the non-bull part of the market? So there's a couple conversations going on here. First conversation is what's the corn likely to do here? Into the end of June, beginning of July, based on what I saw there, believe it or not, actually, I don't really mind the idea of one more dump into that June, July. I don't know whether we take out these lows or maybe we do just marginally. And then, believe it or not, on the other side of that end of July event, I actually like the idea of them rallying it back to good old Joey Diamond's $38,000 Bitcoin target. By the way, he absolutely hates the Bitcoin, but he acknowledges that Bitcoin's probably going to rally to 38,000. How do you reckon that? I don't know. So that's sort of the scenario that I see out of Bitcoin. With regard to altcoins and that part of the market, I actually don't think it's helpful to look at Bitcoin because I think, altcoins, unfortunately, they're going to follow their own path. And usually it's not nearly as healthy as Bitcoin. So that's where we move to things like the shitcoin index. So this is an interesting product. FTX has it. I wouldn't be surprised if FTX itself comes under a lot of pressure over the next little while. You can see ABCDs. You can see that takes us down to the POC. You can see that that's basically the structural low from 2020. I could very easily see that. I don't see any reason why this wouldn't happen. We're not really that far away. If anything, I might even argue into that end of June, beginning of July, that last dump into that level, that marks some sort of short-term pivot. Then we probably rally back, and my hunch is we're probably going to rally back and kiss this megaphone trend line from the other side, while Bitcoin rallies back to 38,000. Now, once this happens, and then we start getting on the other side of this equation, keep in mind that this document that was leaked was not actual legislation. It was a bill that's under construction, and you say allegedly leaked, of course. Oh, God, yeah, whatever. But this is still just sort of making the rounds of the U.S. Congress. It'd be fascinating to see if, number one, the bill ultimately ends up looking like this, or number two, whether they can actually get this thing passed by November. My hunch is they're not going to be able to. And then if, I'm thinking, the Republicans come back storming back into power, this whole thing might get shelved. Because frankly speaking, the way that I look at the market, ironically enough, is exactly what you're seeing in the market. The right-wing political party in the United States of America theoretically is pro-business. This chart is kind of hard to understand. Let's, I'll just do a new one. Pro-business, what am I looking for here to say? Usually they're landowners. They're more conservative. They're asset owners. They actually, pro-oil because they own the land that the oil is on, right? They own the oil wells, right? And really, you might even argue it's the same sort of thing. Think of capitalism in the United States. I think a simple analogy is think of a ranch. On the ranch, London Gabaldon says, "Brian, I need you." Okay. I don't know. The good part about a guy like me is I'm just going to sit here and blab away until somebody tells me to shut up or my voice gives out. So, like I said, London, you could go on the YouTube feed and you could sit there probably for the next year and a half just listening to hour after hour after hour of the Beamish just blabbing away. And there's a gentleman, actually, let's see if you guys know on the YouTube page. Can any of you write his name? Who is the gentleman that is literally here every single broiler chicken show? And he actually himself wrote a manual of how to become a trader just based off of the notes that he took on my free videos. Anybody of you know his name? You should know his name. Do you guys know who I'm talking about? Ben and Paul?
Yep.
Okay, Ben knows. So the interesting thing is that, dude, if you want it, it's right here. Just park yourself in front of the YouTube and don't leave, right? Excellent. Ben nailed it. Doesn't look like anybody on the YouTube page. Oh, there, but I spoke too soon. So, and London, this guy, Great Del Moody, right? He now starts spitting out TA to me, going, and I go, ooh, that's pretty impressive. So all you gotta do is just sit and watch, and it's all free. Isn't this great? I give away all of the banksters' secrets. We basically reveal the entire world capital markets. You want to see something funny, London? I'll show you this. This is hilarious. And I think this just basically happens because I just don't give a fuck about money. What I really want is I want to make a positive difference in this world. Seriously. I don't know whether you guys understand that. But I thought this was hilarious. Somebody today, and I love this about my community because it means that the community believes in me, and I love this because I couldn't say it. But somebody, and I love waking up to this. When I wake up to this, of course, it fills my heart. But this guy here, somebody says, who's the best trader you know on Twitter that deserves way more followers than they currently have? And good old Jacques Marat, he goes, hey, that CR investor guy. Thanks, Marat. Appreciate that. But I don't really shill. I'm salty. I swear too much. But if you can get through all of that, I'm very long-winded. If you can get through all that, then I think there is value in listening to me. So anyway, London was in my level 1 class. Oh, interesting. Well, London, I hope you're hanging in there, bud. Hopefully you've learned how to use a trading plan and you're just running your small business of trading. And you know what sucks about trading and capitalism? Hey, all of you should write this down. In bull markets, everybody makes money. But hopefully you guys are now seeing that in bear markets, nobody makes money. It's actually very difficult to make money in a bear market. And half of your job, if you're an investor, is just you got to cool your jets and you just have to wait for the market to get friendly again. And then when it does, and you know what that speaks to? That's that 4-year cycle I was just talking about a second ago. I mean, you can't write this stuff any better because it's just so... The cool part about crypto is it's so cliche. I mean, it is really, really good at following these 4-year cycles. So, London, if you need to, just go and grab this image I was just talking about a moment ago and just say, where are we on this cycle? Is this the time of year where we want to go and make $1 gazillion speculating in crypto? I hate to say it, but I think, we're sort of like, heading through here. And actually I thought, yeah, this is year to year. So I don't even have 22 on here. I did an extra one where I sort of said, okay, well, that's what 14 looked like. That's what 18 looked like. So what might 22 look like? And that's what this little one was. I don't know whether you can see that. So I just took 14, I took 18, I just overlaid them. That's our path. I mean, it sucks horsecocks. But the good part about this is, like I said, this market is very cliche. My hunch is we spend about a year or so going sideways after we get this cleanup done. The interesting thing about that is if we do the cleanup in 22, goes sideways and base into 23. Then look what's coming in 2024. I mean, like I said, this stuff is ridiculously cliche. So, wait a minute. Just got to find the damn chart. There's happening event, April 2024. So you can see it coming, right? 22 shit. There's that 1 year of shit. Then about a year of basing. And then usually about 6 months ahead of that happening event, a year, somewhere between a year and 6 months ahead of the happening event, there's the last happening event, there's the bottom. Just start accumulating. It's just that easy. It's ridiculous. It's just that easy. So, but the problem is you got to respect the fact. Now, here's something that maybe you'll learn. And of course, we have lots of fun. You know, I'm even hearing guys like George Gammon now even saying, I know, I watched his videos over the past 4 or 5 years, especially back here, you know, when the sickness and all that kind of stuff, when he started getting going, he never talked like this. But now, I even heard in one of his recent videos, he said, if you ever hear these, 4 words, if you ever hear these 4 words, then you know we're at the end of the cycle. Anybody know what those words are? And oh, by the way, you heard them out the fucking yin-yang all up here. God, you just heard it every goddamn day. It's just disgusting. Anybody know what those words are? I'm sure I'll ask my panelists. Do you know what those 4 words are? You don't have to answer. Or you don't have to tell me, but do you know them? Yep, Paul got it. Hey, there you go. Oh, Ben, yeah, you're not this time it's DeFi. Well, I guess so, eh? That's an interesting that's an interesting twist. I never realized that. This time it's DeFi. It's so close. Yes, very good way. Well said, well said. Okay, so back to sort of, we're supposed to be talking crypto and charts here. You see sort of the Bitcoin prognostication, what's going on with shitcoins. I think this shitcoin index is probably a pretty good proxy here. You can see that same ABCD kind of pattern. Obviously, we're in the throes of a pretty nasty correction as it speaks here right now. Then, you know, it's also interesting, too, because, and speaking of Ben's reference, I didn't finish this statement. I should finish this thought. So, why did I pull up this chart, and what's been the theme? Keep in mind that when was the last election? Was it, it was right here, wasn't it? You're an American, Ben? Do you vote? I don't know whether you're American or not. I think he's just hanging out in the States because it's just so awesome.
Yeah, I don't get to vote, but I think it was end of 2020.
Yeah, it was like November 20, right? Somewhere like in there.
Yeah.
Now look at that image. Remember we started off this conversation? This time it's stupid. There you go. We started off this conversation that if you are a Republican, if you are GOP, if you are right-wing, Donald Trump, pro-business, landowners, commodity owners, business owners, do you want a strong U.S. dollar or a weak U.S. dollar? This is the conundrum about this current market, by the way. But do you think you want a strong dollar or a weak dollar? Ironically enough, Republicans, they love a weak U.S. dollar. They love that. Why? Because, remember, commodities, and in this crazy, petrodollar world we live in, and I think that might be coming to an end relatively soon, but we'll see how that goes. But most of the commodities are priced in U.S. dollars. You have to buy them in U.S. dollars. So if you have a weaker U.S. dollar, then by definition, your commodity prices are higher. And if you're a cattle rancher, remember I made the reference, think of our economy as the 1%, we're all on a ranch. and the 1% own the ranch. And let's say there's 1,000 head of steer on the ranch. Obviously, the ranch owners would like to see a higher steer price because they're 1,000 head of steer. If it's $1,000 for a head, all right, 1,000, that's $1 million. If it's $10,000 for a steer, I mean, who knows what the price is, but if it is 10,000, well, now that stock is worth $10 million. If I own the place, I want 10 million more than $1 million. But if I'm the guy that's working on the ranch, and I'm like feeding the steer the hay, or branding them, right, or whatever you do on the ranch, right, fixing fences and all that kind of stuff, shoeing horses, fixing saddles, right. I don't get to participate in the difference of the price of the cattle. So it doesn't make any difference to me whether commodity price is higher, commodity price is low, or the US dollar is higher, the US dollar is low. But if I'm the worker on the ranch and that steer price is higher, and I go to the local saloon after I just got paid, if the steer is $10,000, not 1,000, but it's 10,000, is that steak dinner I'm going to buy? Is that going to be more expensive or less expensive? It's going to be a lot more expensive. It's probably going to be 10 times the price versus the steer that's worth $1,000. It's a really simple analogy. You could think of it as an oil baron sitting on a big pile of oil in the ground, and he's got his little what the hell do they call those damn things? The one-armed bandit, one-armed jacks or whatever. Anyway, the oil pump, it's just pumping oil out of the ground kind of thing. If I'm sitting on 1,000 barrels of oil and the oil is $100 a barrel, well, that's a $100,000 asset. If oil is $1,000 a barrel, well, now that's $1 million asset. If I own the asset, well, I want those prices to be higher. I want the US dollar to be lower. If I am the worker, though, remember my pay is like, minimum wage or whatever, $20 an hour. That doesn't really change day by day. But if the US dollar is lower and those commodity prices are higher, when I go to buy my steak dinner, oh boy, I got a problem. I might not even be able to afford it with my paycheck. So I would prefer a stronger US dollar as a worker because theoretically that means lower inflation. Now, you can see the Democrats all came piling into power in November 2020. And this is exactly what should happen, is over that 2-year period, the US dollar has rallied appreciably. This is also a conversation about sort of the 1%, the people that are in charge. They want you to use US dollars. You hear fucking yelling, going on about the evils of cryptocurrency and the volatility. What a coincidence. She made reference just on this exact day that her buddies went after Luna and destroyed him. So this is sort of like, hey, I'm the boss. I'm the big gun in town. I'm the shit. And unfortunately, everything else, all risk, everybody's fleeing the scene. The irony of all of this is that theoretically, this should be actually deflationary. How ironic that we had like 20 years of this money printing, and right in the face of a massive deflationary move in the US dollar, we get all this price inflation being reflected in the market. Seems a bit suspicious, to be honest with you. Ironically enough, this actually should be very deflationary. And you want to see a couple things that are kind of concerning me going forward. Everybody, of course, now, I mean, if you asked all of the talking heads and all of the quote-unquote experts of our society a year or so ago and said, oh, are we going to have a real problem with inflation? None of them said yes, not a single one, right? You all heard them. They said, well, inflation, these are transitory effects, and they'll be gone soon. Ironically enough, actually, I think they're right. It's just that they didn't have a long enough time horizon for that transitoriness. And now what you're actually seeing, and I find this fascinating, and Bitcoin, of course, is as your inflation proxy. If you see Bitcoin prices going down, this is deflationary. It is not inflationary. So I might argue that, interestingly enough, this particular cycle, 14 deflationary, 18 deflationary. How deep this goes here this particular year, I don't know. I mean, nobody does. But I would definitely say we've got a deflationary wind at our back, ironically enough. And why do I say that? And this is exactly opposite to what everybody else is saying in the market. Everybody else is saying, oh my God, inflation's run away. Inflation's a major problem. Inflation. Ironically enough, I don't think so. I think actually we're now going to flip and things are going to get really nasty on the deflationary side. And here is a really good anecdote of that, where what ended up happening, and here's the problem, is that all of this inflation, people over the past 30, 40 years, and my apologies for this page here, we'll do this. The way to get around this is just open in a private window and then all that nonsense goes away. So, but what's interesting about this is they built this economy in, how do we say this? Following the Cold War in the idea, and then of course, building out the Chinese economy and all that. But they built this economy and they called it sort of just-in-time supply management. And as long as that kept moving in that direction, that was a deflationary force from the supply side. Remember, there's two parts to this equation. There's supply and there's demand. Now, unfortunately, the politicians and the banksters and stuff, they can't really attack the supply side of the equation. And you've heard Chair Powell himself say, there's not much I can do about supply. And what I think happened there was through the sickness, the system was shocked, and all of that just-in-time supply management supply chain, you've heard about it. I remember there were stories a year or two ago about ships turning sideways in the Suez Canal. I mean, how ironic, what coincidence, I don't know. I heard stories about, through the COVID nonsense, the state of California, at one point somebody corrected me the other day, told me there were 200 ships sitting offshore waiting to unload their products. It wasn't like the products weren't available. It's just this stupid fucking woke bureaucrats on the left coast of North America, they went into some sort of weird we have to visually and personally inspect everything or everybody in the United States is going to get COVID. And so as a result, we got to shut everything down and it all has to be inspected one item at a time, which I don't think was realistic. And it caused a lot of this supply management problem that has led to this inflation. The irony of all of this is that at the exact same time that you had this inflation pressure from a lack of supply, it was exacerbated because these goddamn politicians and the central bankers both they did the exact wrong thing at exactly the wrong time. I mean, literally exactly the wrong thing. Unless this was their plan from the get-go. So, when we're in a supply shock situation, it doesn't matter about how much money Joe Sixpack has in their pocket. That doesn't make any difference. And if you go and give Joe Sixpack a whole bunch of money, i.e. stimmy checks and all that nonsense, it's a supply issue, not a demand issue. So you're even stoking more demand in a supply shock. What is that going to do to prices? It's going to cause massive price inflation. Exactly what we're going through right now. It is not enough products can get to demand. And these stupid leftist governments are going and spending money like drunken fucking sailors, like George Gammon likes to show. You know, your Uncle Sam, your drunken, insolvent Uncle Sam just can't stop spending money. And you even heard like fucking Biden and all the politicians and even Grandma there in the U.S. Treasury build back better and all that nonsense. It's almost like they saw an opportunity. Hey, this is an opportunity we can go and ram through a whole bunch of spending. So let's get as much in there as we possibly can while the public is really confused and they don't really know what's going on. And what's ended up happening is they stoked demand to chase after fewer goods, which caused hyperinflation. The irony, here is the true irony of all of this, is now companies like Target cutting prices. What? They're cutting prices? Well, wait a minute. I thought you said we were in hyperinflation. You don't cut prices in hyperinflation. You raise prices in hyperinflation. They're cutting prices because inventories, all those damn ships off of the coast of California, they're now emptying out. They've finally been allowed to unload their cargoes. And now the Targets of the world are we got a hell of a lot of inventory here. What the hell are we going to do with all this stuff? So in a weird sort of way, and this is what I actually posted, is because the governments went and did this and they shot their wad at exactly the wrong time and created this hyperinflation, which in essence just inflated away all of that government spending. Just poof, all of that money gone through inflation. Go look at your local gas station prices if you don't believe me. Now the public doesn't even have any money to go and buy all these products, and now Target is overwhelmed with warehouse supplies. Do you now see how this is now going to create a perfect storm going the other direction? I find this fascinating. And you want to see what the visual evidence of this is? Boom. That's a weekly price chart. Let's go like daily. That's the visual evidence. You can see the people that own Walmart company right now are like, we've got a bit of a problem on our hands. And, of course, Target. Boom. Do you see the problem? So, ironically enough, and oh, by the way, and here's the kick in the pants, folks. What are we supposed to think if you ever see the market smiling at you? Is that a good sign? Is that a bad sign? This should have never happened. This was stimmy check, stimmy check. Well, Target's not getting any products because all the damn ships are sitting in the harbors of California and they're not allowed to unload. So there's fewer and fewer and fewer products. The consumers with these big fat stimmy checks are like, fuck it, man. I want it. Give me it. I don't care what price I have to pay. So Target's like, fucking hey, man, look at all the profits. Hey, we can keep cranking prices up. We're getting rich. Well, now we're on the other side of that equation. And look out below, Betty. That's dangerous. And this is, you know what this is? This is the blatant mismanagement of an economy. Blatant mismanagement. Or, and this is the bothersome thing, or, and actually Walmart doesn't look as bad as Target, but, or, actually this is the whole plan from the get-go. Why do I say this is the whole plan from the get-go? That goes back to wait for it. I know I have it down here somewhere. This conversation. Why did the equity market do this coming out of the Great Depression? Monetary system reset, whole bunch of bad bonds. All the bad bonds were moved out of the economy. They had to go print a whole bunch of money. In this case, it was a government agency. In this case, they just simply transferred all the bad bonds over to this Federal Reserve, which is nothing more than a cartel of banks. There's no way that they're going to take any losses on that, so they just instantly print money to offset that. When you increase the money supply, ironically enough, what should end up happening here is the economy has had so much stimulus that it should just absolutely explode higher here. And the irony of it all is that that's exactly what's supposed to happen. This is the greatest generation. You could argue that this is the days of Camelot. And here, this is the next generation. And the days of Camelot, it basically did the same thing. This was actually the official point, 1971 right here, where actually the standard of living of our entire society started to actually really fall apart. And if you look at like the destruction of the US dollar, it sort of officially started here when Richard Nixon decided that the United States did not need to be on the gold standard. And literally you see lots and lots of historical, there's one really cool Twitter thing. It might even be a website, but I think it goes, what happened in 1971? And that's basically when Tricky Dick took the Americans off the gold standard. And you can just see case after case after case, lots and lots of, this is the sad part about it, right, is there's 1971 kind of idea. So workers' pay relative to the size of the economy, basically it disconnected with reality. And, things like, it's absolutely remarkable how everything in 1971 just completely disconnected. And, famously, and really, this started in 1913 when the Fed took over the U.S. Central Reserve System, if you will. We've all talked about this. Here's 1971 where it really started to get going in earnest. 2020, we're at $1. We started at 26 and change. And this was basically when the banksters took over the U.S. dollar. And look at what they've done to it. Just destroyed it. So, where am I going with all this? That was quite a long rant. Not quite sure what I wanted to end on there. I think what I'll just simply say with this, sort of to wrap this up, is this is the Great Reset window. I often tell people that, all of this conversation was around the U.S. dollar index. It's interesting that the U.S. Federal Reserve now has sort of said, it's not this one, has sort of said that, okay, we got to get our sort of act together. We got to get in control of this U.S. dollar, bring it down to earth. What do I do with the damn chart? Oh, I guess I had it on a Walmart chart here. I wouldn't be surprised if we start heading into some sort of deflationary spiral here. You saw that like 2022, 2023 are the sort of reset windows, years, if you will. Another report, if you're watching this for the first time and never seen this before, this is a great piece that Josh, our blogger there, he put this up on the site. This study was done like a couple hundred years ago. And it basically predicts troughs and peaks in the market almost perfectly. there's the 2019 peak, and basically the stock market peaked in like January 2020. And notice the trough here, 2023. So we're in that nasty, nasty part of the cycle where everything is pointing down. I think this is Klaus's great reset event here. It is happening as we speak. I think, believe it or not, that we're now actually going to go through a year or two of pretty bad deflationary sort of unwinding. Target's probably a really good example of this. And you can kind of see, I mean, doesn't this thing look like this just went parabolic? Well, just woohoo! What the hell? So, as I said earlier, if they don't want the economy to break and we start seeing more quantitative easing and more money printing and shit, that's just going to lead to inflation now. I don't think that they even have a choice to do that anymore. I think this has to now unwind, right? And interestingly enough, we would probably simply say that the deflationary force is probably going to do nothing more than just bring this market back down into reload zones. And interestingly enough, I'm a big fan of 78.6 fib. I really wouldn't have a problem taking a real good look, maybe at this thing down in this area here. Maybe I got to go right off of the whole floor. In fact, W.D. Gann himself would say, you're probably best just to actually set this to 0. And then what you really should expect is a 50% retracement of this range if this actually is a official correction. So that, just W.D. Gann wise, means that he's expecting this to come down here. Actually, it's getting pretty close to that. I think that this is actually a buy, and actually you could probably draw like trend lines off of this, stuff like that. Oh, come on, you. I hate when it doesn't line up like that. Anyway, something along those lines. All right down in there. There's my 78.6. I like the idea that this thing actually bottoms, right? Something like that down in there. It might actually happen a lot faster. Right? It might even be like that. Actually, also, too, a really good example of this unwinding. Again, this is deflationary. Is our all-star mutual fund manager, Kathy. This is the inflation here. But I actually think the market is now actually in a deflationary push. So go figure, eh? I mean, that's, the same thing, we can pull up Bitcoin, BTC. This is inflation, money printing, the whole damn thing, right? Hey, Josh. Stimmy checks, build back better, Justin Castro, all that nonsense. And now you can see the deflation is actually starting to take hold here. So fascinating that that's actually what's happening here at present. You can actually start to see the deflationary forces taking over. So go figure, eh? I think probably the final piece to this, and unfortunately this always seems to happen at the end of these moves, and I was talking about this with the site today, is here's a really good example. This market is going through its inflationary push. You can almost start to see, remember what we said. What are we supposed to think if we start seeing the market smiling at us? So you can almost start to see that even though everybody and their brother is talking about the dire situation with wheat, I actually think that the markup process is actually over here. It hasn't broken yet, but I'll tell you, as soon as wheat trades down below that level, that's telling me that the markup process is over, and that actually we have to start thinking about the markdown process. And then also on the heels of this, and this of course is what everybody's watching with Mr. Wonderful over there in Eastern Europe, is this thing going to top out? My hunch is As soon as this thing actually starts emming out, then you will know that this inflationary push is over. As soon as we get anecdotal evidence that this inflationary push is over, then ironically enough, I think that's actually when you start to see the stocks actually start to bottom and they start to move up in earnest. Who's the most sensitive to these energy prices? The most sensitive, of course, is tech. So it's interesting to see the tech actually, you can see, tech started to top out. Remember, what are we supposed to think if we see the market smiling at you? So you could make the argument that tech actually topped out there. So if we go, we'll just compare crude. Yeah, what a surprise. So tech topped out and started to break as soon as crude said, you know what, I want to go parabolic. Let's party. And of course, I think that's right around when Vladdy shit his pants there. So, my hunch is commodity prices top out. This thing's already working its way down. It's interesting. Somebody on the YouTube page said that Nancy Pelosi went and just bought a whole bunch of call options on Amazon. Is it Amazon? I thought somebody said Apple. And we dissected the trade. So June, my suggestion for you is come on the site, watch the daily brief. We went through all the numbers. Frankly speaking, I looked at the charts and I think the chart, I like the trade. I mean, it's a pretty good trade. It was smart. It wasn't a stupid trade. So frankly speaking, I didn't have a problem with them buying them. It's kind of like, are you chasing an up market here? I mean, I don't know whether you use the NASDAQ index itself to look at individual stocks, but something like Microsoft, there's the double top. I mean, I don't want to go into this. What I would suggest is just go watch the daily brief today. But my hunch here is commodities, especially the commodities that are running now, the ags and the energies, kind of leading parts of the commodity complex. We are in that sort of inflationary push. Remember, stocks are always a leading indicator, right? They always move first. So the commodities themselves moving up right now, I think, is actually the lagging part of this move. It looks to me like they're in some sort of blow-off phase. And my hunch is, I don't know whether it happens this year or not, but my hunch is, where the hell is it? My hunch is the reason why you actually see this is because the market has done the reset. It has absorbed the new monetary base system. Prices have been adjusted in the economy to reflect the new monetary base. And in that environment, the central planners have capped the inflation push. And now, given this new environment with the new money supply system, the new pricing models, companies can get back to work to actually build better mousetraps at the new pricing levels, and then you start seeing that reflected in corporate earnings. And the corporate earnings are what drive stocks higher. And that brings us full circle back to this image. Why did this happen? This happened because they got rid of the bad bonds. They reset the currency system. And now it's the Klaus reset. Back then they called it Bretton Woods. Huge amount of new capital in the system. Companies basically were given the green light with all the new capital in the system, new lending. All the banks had new pristine balance sheets so they could go and lend like crazy. And the economy took off as the new generation came online. And I think that's exactly what's going to happen here. We got to get through the 22-23. This is the great reset. And, if you listen to guys like Cotter, no, actually, it's not Cotter. And he's going, what? What? You talking about me? No, you listen to guys like Cole on this site. He doesn't believe the great reset actually finishes until 2027. Oh, Jesus. I got a funny feeling that the great reset's going to happen here sooner. But I think actually what happens is we actually start melting up a bit as we go into that Belt and Road Initiative. Big 5-year plan of Winnie's. And he had been talking about that since, probably the past 5 years or so. And that's supposed to kick in 2024, 2025. And it's interesting, sort of finish off this long rant. It's interesting if we think about Belt and Road 24, 25, then you go back down to Mr. Benner, wherever the hell he is, and we notice that Mr. Benner, he's actually okay. He thinks that the market can do okay into 2026. I wouldn't be surprised, Mr. Cole is saying 2027 could be a bit of a nasty year celestially. There's a whole bunch of stuff happening. But you can see that this bottoms in 2032. So I think that's sort of like the next cycle. I don't really want to worry about that right now. Right now, I want to think about what does this trough in 22-23 look like, and how does that set us up for that Belt and Road rally into sort of 24, 25, 26. Now, does this align with our crypto? Again, we go back to our 4-year charts, and I actually think it does. It aligns actually really nicely. First off, we know that the next halvening event is early 24, so that aligns nicely. We also know that following these halvening events, Bitcoin has a bad habit of going a little insane here, right? You see that? So that's basically your year and a half following the halvening event. Well, year and a half following April 24 takes us into about the middle of 26, which is basically exactly what Mr. Benner is looking for, and that's right into that Belt and Road Initiative window. And then add insult to injury, because Beamish just loves talking so fucking much. We scroll down and we ask, what does the next 4 years look like? My hunch is, and I've said repeatedly, that I think that we're actually doing a 13-14 redo. The difference here with this year versus like 21-22 versus 14-15 is you can see that the rally at the end of this cycle wasn't nearly as big as the rally here after the Silk Road reversal. Now, some people say that the reason why the price went so crazy here was there was this thing called the Willy bot that actually went out of control, and it actually destroyed Carpellis over there in Mount Gox. And nobody was expecting this, and half of the reason why Carpellis went under was he wasn't even expecting this, where price went up so much, and then people were like, all right, time to cash out. I'm a millionaire. Where's my money? And he's like, I don't have any of your money. What? Where are my coins? Well, actually, I spent them on hookers and blow. Uh-oh. So I think that's actually the reason why this last cycle wasn't as muted, wasn't as big. And also, too, the irony of it all is that everybody and their brother this past cycle was going, okay, we're going moon, we're going moon, we're going moon, we're going moon. And what's going to happen in that kind of environment? Exactly the not moon. It happens. Too many people are bullish. Too many people are long. Ironically enough, the market probably ran out of sellers, or ran out of buyers, because everybody and their brother bought expecting ridiculously high prices. As soon as the market ran out of buyers, it rolled over and headed back down and broke everybody's heart. So point here is, what should we expect going forward? If I think this is 13-14, then I think we have a year of sideways. So that's like 2023. Benner cycle. We make our low in 23. Maybe we make our low at the end of the year in 23. I don't know, but I think we make our low in 23. 24, heading into that halving event, is a very respectable bull. And 25, Belt and Road, sets up our next, we're all going to get stinking rich in crypto again. Do we actually go to new highs or not on the corn? I don't know. I see a lot of headwind for the corn. See a lot of headwinds for DeFi and what Mr. Vitalik is doing with POS from a legislative point of view. And I see a lot of headwind from the environmentalists about POW and the drain on the environment and all that nonsense. So I believe crypto is here. And I mean, what the hell? The goddamn thing went to $60,000, $70,000 a coin. I mean, if you had asked somebody back here in 2011, would you be happy if Bitcoin went to $50,000 at one Bitcoin? They'd be like, oh, are you kidding me? I'd be stinking rich. And hopefully they are. You know, Da Vinci and all those guys that loaded up down here. And, you know, what I find fascinating was through all these cycles, there was a lot of personality and a lot of emotion and stuff in trading. And almost all of those people, they're all gone from crypto. None of those people are in this space anymore, which I find fascinating. Okay, so didn't really talk about any individual stories because, frankly speaking, I don't see much that actually I really want to buy. If anything in crypto, I just kind of want to leave everything alone, especially with the way the breadth indicator is looking right now, especially with the way that I'm thinking that the market's going to roll over here following this Fed meeting that's coming up. Next Fed meeting, last Fed meeting when the market got news. The market rallied into the Fed meeting, and that was a month ago, and then it just puked out violently the other side. Remember all the references around Brian's birthday and all that stuff? So here's another Fed meeting. I fully expect the market to be relatively firm into this, and then I expect the market to roll over hard following this 15th event. And as I showed you earlier from the although I don't know where the hell it is. Yeah, I'm running out of steam now. Anyway, I showed you from the political election study. I don't know where the hell I put it. Anyway, I think that we see some sort of trough here. Where is it? Oh, I thought it was right there. Maybe it was this one. Yeah, there we go. Some sort of trough here right into the end of the month. So, you know, we've got next Wednesday is the Fed meeting day. So this should be interesting to get our predictions of what's going to happen. What did happen into the show, because the show will be after the actual Fed announcement. And actually, you know what? I want to make sure. I don't know. Fed announcement date June 2022. Fed FOMC 14th, 15th. Yeah, okay, so the rate policy announcement will be on Wednesday. We might find that, like, let's say we all betted bullishly, and heading into that 14th, 15th, we're all correct. And then the day of the show, the whole damn market collapses and we're all wrong by time showtime comes around. Let's see what happens. That's my prediction. Okay, so with that said, we're well past 2.5 hours. More of a macro conversation with you guys. I hope I was of some value here tonight. Didn't really have the boys talk too much, so they got off pretty easy. Actually, I gave them an opportunity to talk to you a little bit about crypto legislation, but that didn't really go over too well. We'll try again next week, I guess. I asked Paul, I guess maybe one of the reasons why, and I can't believe I just talked for 2.5 hours straight there. That's ridiculous. But I asked Paul before we got the call going tonight whether he wanted to review anything with you. You know, he does quite a bit of day trading. And Paul, you want to tell these good people what you told me before we got the show going?
Yeah, just it's an ugly market even for me in the last couple of days.
So you just haven't been doing much, eh?
No.
Yeah. So let's wind this up tonight. Ben, are you doing anything? Hopefully you're in the level 2 now, so hopefully you're tricking out your charts and learning about domino indicators and moving average systems.
That's it. Yeah, just practicing my moving average systems and
Okay,
working through the
cool.
course.
Awesome. We were, I guess, unchanged. I guess that's the official reading. Or no, I guess that was last week. But I guess we were again basically unchanged, same color. I don't think any of us guessed gray here, right? Ben was down a bit. Is that no? Who is that? Is that Ben? Yeah, Ben was slightly negative. Derek, but now Paul was Chris, then Sharktoshi, now Paul. Here, let's put bold here so I can see that. You were slightly bullish. Brian was slightly bullish. So once again, all three of us were wrong. Woohoo! Way to go. We're getting pretty good at this, eh?
Yeah.
I mean, the odds of being able to do that,
I beg your pardon?
the odds of all of us being able to do that is
It's probably pretty low, eh?
That's crazy,
Consistently,
yeah.
week after week after week. But I was right last week, so I broke our streak there, I suppose. Anyway. All right, so nobody was right this past week. Nobody gets the booby prize tonight. Let's play some bets. So based on the fact that we've had 2 unchanged weeks in a row, and really the entire time that we've been doing this, we haven't had that happen before, eh? So that's kind of an interesting development. You know, we looked at the Bitcoin price chart, and I guess that is that image right there. These are the futures contracts. We haven't really broken either one way or the other. Fascinating how we're just stuck in this wedge, eh? And it's getting tighter and tighter and tighter. So, what do you think, boys? Which way are we going to be another unchanged? Mind you, the meeting is actually the Fed meeting. Our meeting here is after the Fed. So I think I have no choice. Of course, I'm going to look like a doofus, but I have no choice. I have to go -1. At least. If not even a -2. But I'll since we didn't really have any traction there at all, and now we're so close to that Fed announcement, I think we work our way higher the next few days, maybe even through the weekend. But I wouldn't be surprised on Wednesday the market craps out following the Fed. Maybe it doesn't happen until Thursday, actually. Well, that might happen as well. So I'm going to go with a -1 because I think there's a downward bias to the market right now. We never did this, right? Maybe what I'll do is I'll just put it like that. All right. So Derek's not here. Paul, what do you think? What are we going to do here? Are you still bullish?
+2.
Wow! All right, there you go, folks. Somebody's placing some serious.
This damn range has to broke up.
All right, there you go. Merry Christmas. +2. Wow. So somebody's gonna look like a genius, and somebody's gonna look like a fool here next week. All right, Ben, you're the deciding swing vote. Which direction do you think we're going?
I've put down a -1 as well.
Oh, Jesus. You're going to join me, are you? All right. So we're both -1s. We think the market's softer. Paul's going to eat our lunch. He thinks the market's going to go absolutely apeshit to the upside. All right, cool. Well, nothing better than a good horse race, eh? Okay. Because it is, Jesus, look at that, 2 hours and 40 minutes. I think we probably should just wind it up there. Sorry I talk so much, guys. I don't know how the hell it happens. I don't even know what the hell I said. So why don't we, at the very least, maybe just close with some closing thoughts. Paul, you want to lead us off? Any thoughts you have for the week coming up?
The same message from every week. Just manage your risk, rate your setups, lower your risk per trade if you are a beginner trader. If you are not a trader, just calm down, just wait, be patient, or maybe try to take a little lady approach. We have location, but just that. So we have time to accumulate and invest in altcoin space. I see many people just try to buy on this level. Could go even lower, could go 80% lower from these levels. So a lot of patience for investors and manage risk for day traders. It's the same message every week.
It is, yes. Mr. Exciting.
Yeah, but the market is not exciting. The trading is not exciting. It has to be boring.
Very well said. Well said. That sounds like that came right out of a Grim line, I think. All right, and Ben, what do you think? Any closing thoughts of these good people?
No, nothing in particular. That's a tough act to follow. Just go reverse about 1 minute on the YouTube video and re-listen to Paul's advice and send some PMA to Brian for him and Liam tomorrow.
Oh, you're awesome. Thanks, dude. In fact, actually, I seem to remember last week we didn't do it, eh? And Liam's been a little bit off this past week, so I think if anything, you just locked in. We're going to have a great afternoon tomorrow, so thank you. I appreciate it. All right, everybody, go real slow. Slow and steady wins the race. What I think probably, and it probably sounds like a total cliche, but your job in this kind of environment is just simply to play really good defense. Make sure that when you hear Brian barking about weekly W's, barking about bullish momentum divergences, barking about, well, we're at the bottom end of the range, we've been going down forever, it's about fucking time we start going back up again, that you can play the game at that time. But the only way that you can do that is, number one, you got to have your nut covered now. So if it means you got to go get a job flipping burgers, then suck it up and just do it. So that next cycle, when you do knock the cover off the ball, you can think back, man, I really sweated. I worked, I sacrificed, and I deserve this monstrous profit that I just realized. And ironically enough, if you actually do invest that kind of mental, physical, spiritual capital into this process, then reaping the rewards of good work, I think it makes it actually worthwhile. It really does. But like Paul said there, now is not the time to be a hero. So go slowly. I'm right now trying to figure out how I can book a flight to Europe. Man, just that in itself is difficult. Trying to keep Liam on a slow and steady keel. Trying to make sure that all the site people feel like they're getting good value for their time and money spent on the site. But going out and making $1 million from speculating in the market right now, that's not on the top of my priority list. PMA for the win, right? Let's all stay positive through this. As Cotter says, maybe this is a good opportunity for you to go build a nice chicken coop out the back and enjoy some getting back to nature. I think that's absolutely so cool. And I wouldn't be surprised if the price of a dozen eggs is like $100 by the end of all this anyway, right? So you might just get rich being able to sell eggs back into the system, Cotter. Way to go, dude. You rock. All right, everybody. Have yourselves a great night. PMA for the win. All the best. And the only thing left for Brian to say here, I think that I haven't taken us out in a while, is a big hearty bye for now.